Welcome to the Global Commerce Academy, your platform for 100% free CMA USA coaching. In this video, we cover Chapter 6, Limitations of Internal Controls, a short but highly testable concept in Section E, Internal Controls from the CMA USA 2025 syllabus. Hello, future certified management accountants. Today, we're diving into internal controls, the systems and rules that keep companies running smoothly and protect their assets. Think of internal controls as the walls of a fortress designed to keep out fraud, waste, and error. As a CMA, you'll help design these defenses, but no fortress is invincible. Internal controls have limitations, cracks in the armor you must understand to be truly effective. Even the best systems can be beaten by human error, clever teamwork, or simple oversight. Millions can be spent on controls, but things can still go wrong. This guide is about those things, the hidden weaknesses in corporate armor. We'll explore 6 key limitations, not to scare you, but to prepare you. Knowing where the weaknesses are is the first step to defending against them. By the end, you'll see internal controls not as static rules, but as living systems needing constant vigilance and critical thinking. Perfection is the goal, but managing imperfection is the reality. This is the real world of management accounting. Let's get started. Let's start with the most common limitation: human error. People make mistakes. No policy can eliminate that. Even the best designed control depends on humans who get tired, distracted, or simply have a bad day. Imagine a clerk rushing to finish work and accidentally processes a payment without the required approval. The control failed, not because it was flawed, but because a human made a mistake. These small, everyday slips can add up and cause real problems if not caught. Controls that rely on people are inherently vulnerable. Your job as a CMA isn't to eliminate human error, but to design systems that catch mistakes after they happen. That's why we have reconciliations, reviews, and double checks. Safety nets for when people inevitably wobble. Human error is unavoidable, but smart controls can minimize its impact. Always plan for the possibility of mistakes. That's the mark of a great CMA. Now, let's talk about collusion. When people work together to beat the system. Segregation of duties is a key control. No one person should control an entire process. But if 2 or more people conspire, they can override even the best controls. Picture Alice, Ben, and Carol. One approves purchases, one receives goods, one processes payments. If they team up, they can create fake companies, approve fake orders, and split the money. Each step looks legitimate, but the control fails because trust was broken. Collusion is hard to detect because it mimics a properly functioning process. The paperwork is perfect, the signatures are there, but the system is compromised. As a CMA, you must be alert to unusual relationships or behaviors, like employees who never take vacations or seem unusually close. Collusion is a powerful threat because it exploits the very trust controls are built on. Watch for red flags and always question what seems too perfect. Controls are only as strong as the people who operate them. Stay vigilant for signs of teamwork gone wrong. Collusion can render even the best designed systems useless. Never underestimate the power of a well-coordinated scheme. That's why skepticism is a CMA's best friend. What if the person breaking the rules is the one who made them? That's management override. Managers and executives can bypass controls, instructing others to ignore procedures. Imagine a sales director under pressure to hit targets, telling staff to book revenue early or approve risky deals. Employees may comply out of fear or respect, even if it breaks policy. This exposes the company to major risks, like uncollectible debts or misstated financials. Management override was a key factor in scandals like Enron and WorldCom. As a CMA, you have an ethical duty to challenge improper overrides, even when it's uncomfortable. The biggest threat to controls can come from the top. Courage and integrity are essential. Don't just follow orders, question them when necessary. A strong control environment requires checks on everyone, including management. Remember, Authority doesn't make someone infallible. Be the voice of reason when rules are bent. Let's get practical. Internal controls cost money. You could make a system airtight, but is it worth it? Controls are only worthwhile if their benefits outweigh their costs. For example, spending thousands to prevent a few dollars loss makes no sense. Companies must accept some risk because eliminating all risk is too expensive. The goal is to reduce risk to an acceptable level, not to zero. A small store won't install cameras to stop pen theft. It's cheaper to accept minor losses. Big companies use software to flag only unusual expenses, not audit every report. As a CMA, you'll help management balance control and efficiency. Cost-benefit analysis is key to smart control design. Don't over-engineer, focus on what matters most. Accept that some losses are cheaper than the controls to prevent them. That's good business sense. Many controls are now automated, but systems have their own flaws. Software can process millions of transactions, but it's only as good as its programming. Systems may not communicate well. One system might accept orders the other can't fulfill. Bugs or logic gaps can create loopholes for fraud. For example, splitting invoices to avoid review thresholds can trick automated controls. Systems are also vulnerable to hacking and require constant updates. Outdated software can leave companies exposed. As a CMA, you don't need to code, but you must understand your system's strengths and weaknesses. Ask how systems integrate, how secure they are, and if their logic is robust enough. Don't assume automation means perfection. Technology is a tool, not a guarantee. Stay curious and critical about your company's tech. The last limitation is human judgment in designing controls. Controls are created by people, and people can misjudge risks or design weak controls. For example, a cutoff test for sales might miss errors if the sample is too small or the timing is off. Poorly designed controls give a false sense of security. Controls must evolve as the business changes. What worked 5 years ago may be obsolete now. As a CMA, you must constantly evaluate and improve controls. Use your professional judgment to keep controls relevant and effective. Don't rely on old assumptions. Regularly reassess risks and update controls as needed. Good judgment is the foundation of strong internal controls. Now, let's connect this to your CMA exam. The ICMA wants you to think critically about control systems, not just memorize definitions. Expect scenario-based questions asking you to spot weaknesses, like management override or collusion. Look for red flags: too much trust in one person, close relationships, or cost-benefit imbalances. Always ask, where could a mistake happen? Who could override the rule? Is the control worth the cost? Think like a skeptical auditor. Don't assume any system is perfect. Understanding these 6 limitations is your key to mastering exam questions. Practice spotting the cracks, not just the rules. So, those are the 6 big limitations of internal controls. Human error, collusion, management override, cost-benefit trade-off, systems limitations, and flawed judgment. If every system has weaknesses, what's the point? The answer: resilience. Your job as a CMA is to build strong, adaptable systems and be the vigilant guardian who understands their flaws. Controls aren't a one-time fix. They require ongoing monitoring and improvement. You must balance security with practicality and have the courage to challenge authority when needed. Think of yourself as a doctor for the company's financial health, always checking for symptoms and prescribing improvements. Internal controls are powerful tools, but only as effective as the people who use them. By understanding their limitations, you make them stronger. Replace blind faith with informed vigilance. That's what it means to be a CMA, the guardian of an imperfect, ever-improving system. Your vigilance ensures the long-term health and integrity of your organization. Stay sharp, stay skeptical, and keep improving.